Stocks take a dip after Friday's surge, while the US dollar strengthens. In a surprising turn of events, Wall Street witnessed a decline in major stock indexes on Monday, a stark contrast to the gains seen on Friday. This shift was largely influenced by comments made by Jerome Powell, the Federal Reserve Chair, who indicated that a September interest rate cut was a likely scenario, albeit not a certainty. The dollar, which had weakened last week following Powell's remarks at the Fed's symposium in Jackson Hole, Wyoming, regained its strength. Major brokerages, including Barclays, BNP Paribas, and Deutsche Bank, now anticipate a 25 basis point Fed rate cut in September. According to the CME Group's Fed Watch tool, traders are pricing in an 84% chance of a September cut. Peter Cardillo, chief market economist at Spartan Capital Securities in New York, commented, "There was a lot of enthusiasm on Friday about Powell's indication of a likely rate cut. The market might have overreacted to his comments." Cardillo further added, "I believe we will see a rate cut, but I don't think it will exceed 25 basis points, and much depends on this Friday's PCE price inflation index." The upcoming data for August, due before the Fed's September 16-17 meeting, could still influence Fed policy. The U.S. personal consumption prices reading, expected on Friday, is considered the Fed's key inflation gauge. Hotter than expected U.S. producer price data from last month has raised questions about the certainty of a rate cut. Investors are also eagerly awaiting updates from AI chipmaker Nvidia, whose results are anticipated on Wednesday. The Dow Jones Industrial Average fell by 349.27 points, 0.77%, to 45,282.47. The S&P 500 dropped 27.59 points, 0.43%, to 6,439.32. And the Nasdaq Composite declined by 47.24 points, 0.22%, to 21,449.29. Nvidia's report is among the last of the S&P 500 companies to be released for the most recent quarter. Overall, results so far have exceeded expectations and have provided support to the stock market. Year-over-year estimated earnings growth for the S&P 500 was at 12.9% as of Friday, a significant increase from 5.8% on July 1st, according to LSEG. In global markets, NSCI's gauge of stocks fell by 2.33 points, 0.24%, to 952.96. While the Pan-European Stock 600 index declined by 0.44%. In deal news, U.S. stocks, soft drinks giant Keurig Dr Pepper is set to acquire JDE Peet's for $18 billion, creating a global coffee giant to rival market leader Nestlé. This deal, Europe's largest acquisition in over 2 years, is expected to shake up the coffee industry. London markets were closed for a holiday, resulting in thinner trading volumes across Europe. On the trade front, U.S. President Donald Trump expressed his desire to meet with North Korean leader Kim Jong-un this year and indicated openness to further trade talks with South. The Korean won weakened by 0.5% against the dollar. The dollar index, measuring the greenback against a basket of currencies, rose by 0.56% to 98.39. with the euro down 0.79% at $1.1623. Against the Japanese yen, the dollar strengthened by 0.5% to 147.67. U.S. Treasury yields also increased as traders prepared for auctions this week. The Treasury will be selling short and intermediate-dated debt. The yield on benchmark U.S. 10-year notes rose by 1.9 basis points to 4.277%. Earlier, Eurozone bond yields rose, reversing their fall from late Friday. Oil prices extended their gains from last week as traders anticipated more U.S. sanctions on Russian oil and potential disruptions to supplies due to Ukrainian attacks on Russian energy infrastructure. U.S. crude futures gained $1.14 to settle at $64.80 a barrel, while Brent futures rose by $1.07 to $68.80. Spot gold fell by 0.21%. This report was compiled by Caroline Valakevich in New York, with additional contributions from Nell Mackenzie in London. Editing was provided by Andrew Heavens, Lisa Shoemaker, and Nia Williams. The Thomson Reuters Trust principles were adhered to in the preparation of this article.